A lot of people don't really think. They're like, oh my God, MicroStrategy is going to get liquidated at Bitcoin. It's like, well, dude, no, Bitcoin could go to $1 a Bitcoin. We're not getting liquidated. We're just going to buy all the Bitcoin. If it goes to $1 a Bitcoin, then it's going to go back up again. Right? But people just say things. They're like, well, I heard you have some leverage, and so therefore there must be a liquidation price. If you're the kind of person that can't read 20 pages of investment filings, you probably shouldn't invest in stocks, and you probably shouldn't invest. You should just buy Bitcoin, put it in cold storage, and go to sleep for 30 years, and you'll be fine, right?
The cryptocurrency market, particularly Bitcoin, has experienced significant volatility in recent months. Following a peak in January 2025, Bitcoin's price plummeted by approximately 30% in February, marking its steepest monthly decline in over a decade. This downturn has been mirrored across the broader crypto market, with major altcoins like Ethereum and Solana also experiencing substantial drops. Amidst this turmoil, Saylor, CEO of MicroStrategy, has made a bold statement. He would buy all circulating Bitcoin if its price were to drop to $1. This video aims to provide investors with a comprehensive understanding of the current market situation, the factors driving these price movements, and the implications of Saylor's statement. Bitcoin's price has been highly volatile, dropping below the $80,000 mark and rebounding slightly. This volatility is not unique to Bitcoin. The entire cryptocurrency market has faced significant challenges, with a total loss of over $1 trillion in value over the past month. The recent decline has been attributed to various factors, including market reactions to political and economic developments. Several key factors have contributed to the current crypto market downturn. Recent executive orders by President Donald Trump, including the establishment of a U.S. strategic Bitcoin reserve, have introduced uncertainty into the market. Initially, this move sparked optimism, but ultimately led to disappointment due to the lack of a bold commitment to purchase significant amounts of Bitcoin. Saylor's assertion that he would buy all circulating Bitcoin if it drops to $1 is both a statement of confidence in Bitcoin's long-term value and a strategic move to reassure investors. While the statement seems exaggerated, it underscores Saylor's belief in Bitcoin's strong fundamentals and institutional support. This confidence is reflected in MicroStrategy's consistent acquisition of Bitcoin, with the company recently adding 130 BTC to its portfolio. Saylor's commitment highlights his strategic focus on Bitcoin as a store of value and a hedge against traditional financial market volatility. By emphasizing that he would buy all circulating Bitcoin at $1, Saylor aims to demonstrate the robustness of Bitcoin's fundamentals and the support it receives from institutional investors like MicroStrategy, Fidelity, and BlackRock. Such statements can influence market psychology, potentially stabilizing investor sentiment during periods of high volatility. However, they also underscore the risks associated with extreme price fluctuations, as market participants may interpret these statements as a sign of resilience rather than a warning of potential further declines. Before we delve into the video, if you want the latest crypto news, market updates, and expert insights from the top minds in the industry, be sure to hit that subscribe button and turn on notifications. Stay informed, stay ahead, and never miss an opportunity in this ever-changing world of the financial market. Thank you for subscribing to our channel.
I think Bitcoin is the risk-free rate in the digital assets economy. And so the best way to think of it is the risk-free rate, and by risk-free, I mean, you're accepting the existential risk of Bitcoin extinction event. Okay, so you've accepted that risk, just like when you cross the street, you accept the risk of getting hit by a car. And when you live in, Germany, you accept the risk of getting hit by a meteorite, right? So there is that existential extinction level risk. But once you've accepted that risk, then the risk-free rate on the fiat economy is really SOFR, the standard overnight funding rate. It's like 4.8% right now pre-tax, and it'd be like 3.2% after tax, depending on your tax rate. The risk-free rate in the crypto economy is Bitcoin. And so Bitcoin's been going up 60% a year. So you could say right now it's about 60% as the risk-free rate. But my long-term forecast over 21 years, and I'm conservative, is 29% ARR. So when I evaluate any investment decision that anybody offers me, I start by saying, well, my hurdle rate is 29%, tax-deferred capital gain for 21 years. So, are you proposing to me an investment idea that can beat that after tax, risk adjusted? So as you can imagine, right, that means you have to pitch me an idea that's 60% ARR, right? It's got to be an insanely profitable idea. And even then it would be kind of dilutive and distracting. So I tend to think, that the safe strategy for most people, if you don't want to take risk and if you don't want to be an investor, then you just buy Bitcoin and hold it. I think that the best ideas are ideas built on Bitcoin. So for example, if you were to say to me, well, that's good, Mike, but I want better than 29%. Okay. Well, my question would be, okay, well, do you have a house? Can you mortgage it? If you can get a 15-year loan for 6%, well, if you pay 6% interest on a 15-year loan against real estate and you invested at 30%, then you're getting 80% of the yield in the swap, right? So that's probably a way to boost your return beyond the 29%. So I think long-term cheap debt, right? I mean, not short-term debt. Like I'm not in favor of, like, don't be a degenerate and go on a crypto exchange and do a 20-to-1 levered trade on Bitcoin, because you might get liquidated on Saturday night in volatility. So that's kind of stupid leverage. I mean, people sometimes people are very simplistic, especially on the web. It's like they really aren't capable of sophisticated ideas. So it's like either leverage good or leverage bad, but not really, no. Like, for example, if I give you a 100-year loan, no recourse for 1% interest, or let's make it simple. I'll give you a 100-year loan, no recourse, unsecured for 0% interest. That's leverage. Is that bad? It's like, that's no different than me just giving you the money, right? Yeah. I mean, so there's a certain type of leverage that is no different than I'm just going to give you $10 billion for free, go bet it, and then after you're dead, maybe it will turn out to not have worked. But how is that different than me just giving you $100 billion right now and saying, just go spend it, and after you're dead, maybe people will disagree on what you spent it on, okay? So if the terms of the leverage are good enough, that starts to look like equity. A 30-year, you could have borrowed money for 30 years for 2.75% interest 2 years ago in the US. I said, mortgage your house, right? And people said, oh, you're crazy. You're telling people to take that risk. Borrowing money for 30 years at 2.75% when Bitcoin is going up 60% is not stupid. It's actually the most intelligent thing you possibly could have done. The stupidest thing you could have done was sell Bitcoin at $10,000 a coin and paid off the 3% mortgage, right? The risk-free, the cost of capital in the conventional economy is the S&P index. It's like 15% in the last 4 years. In the Bitcoin economy, it's 60%.
Investors navigating the current crypto market crash can benefit from several strategies. Dollar cost averaging. DCA involves making regular investments in an asset regardless of its price. This strategy helps mitigate the impact of market fluctuations by averaging out the cost per unit over time. Avoiding leverage. Using leverage can amplify losses during market downturns. Investors should avoid borrowing funds to invest in cryptocurrencies during volatile periods. In conclusion, the current crypto market crash, including Bitcoin's recent price movements, is influenced by a combination of political, economic, and regulatory factors. Michael Saylor's statement reflects a strategic confidence in Bitcoin's long-term potential and underscores the importance of understanding market psychology and sentiment. For investors, adopting strategies like DCA, avoiding leverage, and maintaining a long-term perspective can help navigate these volatile times effectively.